Nice.
How's everybody doing? Today we're going to be getting into a little bit of sauce in between the breakers and behind the breakers and why I use them, how I use them, and when I use them. Here you see your standard deviations, and what we saw in the intro was our 3 standard deviation aligning up with 4, and as well as at this 4th deviation, right, we saw that we had our retrace during the London, or not our retrace, but our continuation from the previous day into a London Judas swing, right, that we then delivered lower. But just the main points there is seeing, right, it's from the 4th deviation, which is our, um, not our reversal deviation, but some people call it that, right, and I slid that up as well, right, but then we have our 2.5 deviation where we saw us retrace, right, and then sweep internal lows for a turtle soup, right, back into the breaker. And not back into the breaker, but into the breaker that we created from the breaker. We're going to get into a bit of the notes here, so all of this makes sense, because there is a lot that we're seeing here. We're seeing a breaker here, right, then another breaker, and you can call them mitigation blocks, whatever you want to at certain points, but to leave a little bit of less mess, I try to use just order blocks and breaker blocks, and that's about it. And whether I label it wrong or whatnot, I don't really care about the labeling, just the aspect of understanding what we're doing, why we're doing it, and when we're doing it. This is one of those key videos where you can pair it a lot with, right, the SMT video as well as the rejection block videos, and understanding why we fill certain wicks, why we see certain wicks and close right back into the ranges as breakers anyway. Our right's just a break above a high, or low, right, that's going to get filled and not right a turtle soup. Coming into the definition and characteristics of our true breakers, which is SMT breakers. SMT breakers are considered to be true breakers, and I understand, right, SMT has a good couple different meanings with, right, very high probability meanings. But just keeping, simple for today on the SMT idea. They stem from a winning turtle soup trade with minimal drawdown. When, I don't know why it says that, right? But when the breaker forms, right, you feel so safe with your stop loss and where you're in at the trade that there's no other choice but to hold until full take profit. When you're break even 200 points in a trade or 200 ticks in a trade, right, and you got 200 more to go, it's right like taking candy from a baby. Efficient price derivatives. Why does it efficient price delivery? Sorry about that. Right? Breakers show efficient price delivery. Breakers are not the enigma in trading, right? Drawing liquidity and just mastering your mental is those true thing. That's really what you would call this. But breakers are efficient in price delivery, mean they accurately reflect our intention and our certain direction to move. The concept of drawing liquidity often places breaker at the top of the list for effective trading strategies. Typically, a true breaker involves creating a breakaway gap on a lower time frame before breaking an internal swing high or swing low. This often results in forming a 5 to 15 minute order block or a 5-minute breaker inside of, right, what you would see in a lower 1-minute order block than a 1-minute breaker. Right, so keeping all of our time frames aligned and with them on top of our heads. Right, you'll see us create a 1-hour breaker, right, and then create a 5-minute breaker, right, that forms an order block. And whether it's, right, seeing that we have a lower low, higher high, right, then a higher low, higher high, or however you, right, can just envision it. But it's all about understanding why price is doing what it's due when we create our protected highs and lows, and where and how we're delivering, where, when, and why we're delivering from price, right, at a certain time. Shouldn't have to be said at this point. It's a turtle soup sequence in retracement, right? Following the true turtle soup sequence, price often returns to breakaway gaps left after creating breakers used as a retracement, obviously. That's where we can enter inside of a breaker if we haven't already turtle souped the breaker. Alright, right, turtle soup and anticipated that we would make a breaker. These gaps often contain order blocks that are served as retracement points for reaccumulations inside of our market maker model. And right after reaccumulating, we sweep lower, sweep internal lows, deliver higher, maybe reaccumulate a bit before we take out the high, right, but then continue to take the high. I don't know why the numbers reset from 4 back to 1, but we'll just go ahead and roll with it. Right, like we said, the market might sweep internal lows into a high time frame fair value gap. Right, leaving that below and a low time frame fair breakaway gap. That was probably confusing, right? But the other parts I feel like I explained well. This is our big key point, applying narrative of when, why, and where, learned from the educational resources that I've posted on here a million times to identify true breaker, not patterns, but just to identify the true breaker, and it usually shows itself in a pattern that is, right, very high probability for a turtle soup standpoint logic, or whatever, however you want to say it, right? Patterns don't hold the logic behind price does, and right, whatever time is involved with that price. Standard deviations also go along with breakers, right? I like to align my take profits with keys, highs or lows using standard deviations, but honestly, right, I don't even use them because you kind of just know, right, when or what high is going to be taken and when to take profits if, right, you have an SMT or something. Given the predictability of the turtle soup sequence, obvious take profits might present themselves, right, without complex calculations such as standard deviations. I said that back to back, but anyway. Unlike IFEG traders and breaker FEG traders who seek more confirmation, right, we rely on inherent logic and signatures of time and price in the market to be able to catch price before the breaker forms and anticipate the breaker, and after the breaker forms be able to add in and then hold that price until our draw on liquidity. The hesitancy of these traders usually results in lower RR and higher chances of getting stopped out without true invalidation of our draw on liquidity. True breakers operate with a higher level of confidence and understanding of market movements. This confidence stems from recognizing and acting on the turtle soup sequence and knowing that it delivers price efficiently. They are a super powerful tool, right? Like we've said a million times, they offer and show efficient price delivery. And from a accumulation, manipulation, distribution standpoint, when that breaker forms, you know, and kind of give an idea of how much the manipulation, right? You can deviate the manipulation to see how far price will distribute to. Seriously, if you don't want a turtle soup, you can wait for the breaker to form and then soup inside the breaker and, right, understand why, when, and where it's happening and be able to capitalize on it. We'll get into the chart just a little bit more and close out this video. It's a mess right now, so what I'm going to do is kind of just go one by one, take everything off that we take a look at, and, right, try and, you know, keep in mind that we're keeping all these in the back of our head. We've already went over the standard deviations. Let's take those off. And let's zoom out to our high time frame analysis like we like to do. Right, on the weekly, we have an SMT. Right, ES was above previous week low. Also on the daily, we see that we have two equal lows residing right above a fair value gap, an obvious daily fair value gap. Obviously, we're in a premium, but order flow is strong. A retracement will happen. We just have to understand, right, when we put in a protected low to be able to deliver past the high. Right, and a protected low just means, right, this low that we've put in here, I believe will be protected and should be protected, right, if we're on the right side of price until this high is taken out. like we saw right happen. Coming in from the daily, we come into the 4-hour, and we notice here that we have a low time frame SMT inside a high time frame SMT, right? This confirms also our buy model that we see with the original accumulation here, right, with our smart money reversal. It doesn't confirm that we're going to take out the high, but to me it does confirm after we do close above with displacement that we're going to at least retrace into this fair value gap, which we did and had an SMT, right, and then continued on with the week. I'm going to go ahead and take the fair value gap off, but keep it in mind that's where we're delivering from. We have a London Judas SMT fill, right? Coming into the SMT, filling it on one brain fart, but filling it on one asset and not filling it on the other, right? And this true manipulation confirmed after we close above warrants no retrace lower, right? And it confirms the SMT breaker, right? Zooming in just a little bit more, we can see where our 1-hour order block was created. And we also see, like we talked about, the 3:30 to 4 London Judas sweeping a previous day low. And we did have the valid SMT right on the weekly as well down here. So it was only a matter of time of just getting confirmation that we were going to reach, go ahead and reverse. We were able to catch this long in the Discord on this open, right? As we zoom in a little bit more here to the 5-minute, we notice a very obvious accumulation, manipulation, and then distribution, as well as on the 4-hour, right? We anticipated this to be an open, low, high, and then close, right? Closing green on the 4-hour. You can see this as an obvious accumulation, manipulation, and distribution, right? With obvious low time frame, right? Accumulation, manipulation, distribution, creating and leaving equal highs for more liquidity, as well as our 4-hour obvious draw even for a retracement, right? Even if we wanted to come higher into this 4-hour, or excuse me, even if we wanted to draw lower at this point on the higher time frame chart, it would still make sense that we would come and retrace into this 4-hour fair value gap, then deliver lower. But as we saw where price was delivering from and why, it wouldn't make sense. That's why we expected an expansion higher. Right, some of this liquidity down here was a little bit sus at the time, but right, like after I said, we create the order block and then another breaker and then deliver again, right? You can see the smart money reversal, accumulation, original accumulation, right? You just have a market maker model within the market maker model, right? Going to take this off, right? And then also we see our breakaway gap formed here, right? Creating the breaker, also confirming it by breaking this high and creating equal highs. We see an accumulation, manipulation, distribution, right? Protected high to finish out, right? Whatever you want to see it as a lower time frame distribution, but also, right, keeping in mind that every candle is an open, high, low, close, so we have to make sure that we're aligning them and making them all make sense, right? With the 15-minute, it open, low, high, and closes back within our accumulation range, like we like to see. 30-minute does as well, and it doesn't have to, right? But we see all of these aligning, even, right, like we said, to the 4-hour, anticipating that one, into the 10 a.m. close. If you would have saw, if you were in the Discord, right, we saw the video where I expected this and wanted it before 10 a.m., right? And that's the reason, right? Expecting that we're going to distribute, right, through our 6 a.m., right, accumulation, manipulation, lower, distribution, high time frame for the 4-hour candle. And right, we did take this live, you know, connected to a fucking account and everything, like not paper, and sent it to the Discord and whatnot. Right. I mean, that's like what we do normally, but I don't know. There's a lot of fucking anyway, there's a lot of weirdos online. Create the breaker, deliver back to it after leaving the breakaway gaps, delivering price to the equal highs that we left, and to our higher standard deviations. Right, also, we have our Tuesday low of week profile coming into a Wednesday expansion, right? Actually, I think this was a bank holiday or something. We had no news or something because I'm pretty sure we accumulated. I can't remember, but um, you can anticipate that. Right after having your London Judas, you can use this London liquidity as a draw on liquidity. We'll see if we hit that. See, it makes sense now if we did sweep these, right? But this low won't be broken right before we break this high. This low might be ran in, can't remember coming in back into it, but it doesn't really matter if I remember or not. I just know like we'll run the high, right? And after accumulating here, it makes sense that we'll need to run this accumulation, manipulation, and just to distribute higher. That's enough for me coming in at, oh, I did not notice the time. It's whatever. A little bit of drawdown won't hurt if we need to go into it. And see, obvious draw on liquidity higher, and I'm in micros. I didn't even notice that, but right, that's, that would have been a shit ton on a mini. But I know it's overnight anyway. Wasn't even the perfect time, but right, just seeing, what high and lows, predicted, I still would have caught like a 1 to 3 here. I definitely wouldn't have never traded that like that, but yeah, 1 to 2, whatever. But definitely would have never traded it like that. But right, you can just, understanding right after we accumulate like that, sweep that low and then deliver higher. Especially having a high resistance low, right, our breakaway gap here, like we talked about earlier. Damn, that was a whole day of accumulation. But right, coming into Thursday, which is right Wednesday of the next day, right, we sweep that previous day low, might even SMT, right, but as we close above, right, price is aligned. I didn't like the time of it, but right, sometimes price will do that and just deliver right during a low because we've SMT'd and already swept the liquidity we needed to go ahead and deliver higher. But yeah, that's gonna be all behind the videos or behind this video. It's just like a quick simple breaker video. Right, understanding why price doesn't need to come back and touch an order block. Like I always say, price delivers order block to order block, but if we have efficient price delivery and an understanding on draw liquidity, right, we won't always retrace to the order block. Same with understanding accumulation ranges, right, sweeping that range and needing to deliver higher, right. This is almost copy and paste, like back to back 3 times, like the same trade, but it just looks different and at different times. But I'm sure a lot of you can make sense on why it looks the same and right, understand that. Creating a breaker, right, sweep into the breaker, breaker, sweep into the breaker, knowing that we have a breaker and a protected low, right, sweep the lows, create the breaker here. Could even add it in, but like you saw, my entry was like right here. So right, just hold that bad boy to draw on liquidity. Hope y'all learned something from this one. Hope this was, enjoyable. Hope I'm trying to do a better job of making decent, content and right, making it as enjoyable as possible and, not just like a fucking fall asleep lesson. But hope y'all enjoyed it and y'all have a great one. Maybe like one person might see this because you watched like right to the end, but previous day low, right? Sweep 4 hour fair value gap. Bread and butter, simple ass model too. Right, and you could have seen that on the one like 15 minute like we saw. Right, and then right finishing the market maker model out, right, smart money reversal, lower time frame market maker models, just seeing it's an accumulation, the manipulation after the accumulation into the distribution. But yeah, just throwing this in here at the end for anybody still here.